right, now let's head straight to the FX market. Now, for the close yesterday, we saw weakness in NAFEM and NAFEX 0.32%, but a bigger move down that was seen with the NAFEX window 1,583 Naira. So we see both windows flirting with the 1,600 level at this time. 1.56%, that was the close for NAFEX yesterday. So we're seeing weakness this time. Let's bring in Mr. Bismarck Rewane now, CEO of Financial Derivatives Company. Hello, Mr. Bismarck. Great to have you.
Good morning. Thanks for being here.
So what would you say is responsible for this weak performance of the Naira? We see the dollar index, that's dropped from 105 points to 103 points. Our reserves are rising. We've seen interventions from the CBN in the market. Why is the Naira still dropping?
Well, I think that's a very interesting question, to the extent that Nigerians are asking questions as to why is the Naira dropping? Why is the Naira plunging? Why is the Naira languishing? And finally, some are saying, is the Naira jinx? Should I have bought dollars when it was 1,200? Should I have bought dollars when it was 1,100? One thing is clear, that currency markets are as volatile as any commodity for that matter. Two, there are three variables that are driving the value of the Naira today. One is fiscal, that is government spending. As you know, there's a budget that has just been announced, supplementary budget of 6 trillion. The other one, that's fiscal. The other one is cyclical, which is people are investing, at different times in different sectors of the economy, and that is cyclical. And that goes with the GDP data at any point in time. And finally, and most importantly, is the fact that there's what we call seasonal demand. What is affecting the Naira today is more of seasonality and then fiscal spend. And if you look at the Naira, it's lost 8% in the last 2 months from May to July. In May, it was trading at 1,485 Naira to a dollar. Today it's trading at 1,615, and in some places as high as 1,650. The official window, as you know, trading at 1,485 in May. Today, that official window is 1,576. And the IATA rate of exchange for tickets, which people buy to travel at this time of the year, was 1,506 Naira to a dollar if you're buying the ticket to London, to New York, to Atlanta. It was 1,506 Naira to a dollar. It's now 1,590. In other words, the Naira has lost 8% in the power market, 5.75% in the official market, and 5.28% in the IATA ticket window. Now, why is this happening? Let me break it down for you so you can understand. One is that this is a season of the year when this is summer season, and because there are high fares, people that used to travel 4 or 5 times a year are now traveling once or twice, and so they front load and everything. And this is the time of the year when the weather is favorable, warm weather in Europe, warm weather in Canada, warm weather in the United States, and warm weather in Asia. So this is the friendly time to travel. At the same time, this is the time when schools are resuming. Children are graduating in the May-June season. Those tickets were bought, and schools are resuming in August and September. So there's seasonality of travel, seasonality of IT and digital transactions, conferences, and so that's one. Two, the federal government of Nigeria has just granted a waiver and reduction in duty for imported commodities, which will last 150 days from August 1 till sometime in maybe December and January. What this means is that if you imported any commodities, i.e. wheat, sugar, rice, maize, and you would pay no duty. And therefore, it gives you a window. So people are now ordering those commodities. So the demand for commodities, imported commodities, has increased. Well, the problem is that because the demand for commodities has increased, the exchange rate has actually depreciated because of lower supply. Now, the issue is this, that because this demand has increased sharply, and the exchange rate is depreciating, the savings from a reduction in duty, right? The savings from that reduction in duty and the waiver is more than compensated negatively by the exchange rate itself. So in the end, by September, October, you will find that those prices which had originally come down have become more expensive because the exchange rate has suffered. And it is happening at a time when the dollar itself is weakening. So naturally, what we should see is an appreciation of the Naira at this time against the dollar because the dollar was weakening. But the reverse is that this has happened. Now, what's the outlook? Now, the reason one is that inflation is expected to moderate towards the end of the year. If inflation moderates, then the exchange rate kind of appreciates and interest rates can come down. But in the meantime, Naira spending, 6 trillion Naira supplementary budget, minimum wage, which is going to increase the fiscal spending as well. And the fact that this seasonal demand is compressed in this period between June and September means that the Naira stays weak between now and September. But after September, the Naira begins to appreciate gradually and begins to find its true value. Another factor that we have to take into consideration is that Nigeria has actually gone into a lot of commitments, what we call counter-trade commitments, where oil has been pledged forward for dollars coming in. And we had previous commitments. So the cash flow is disrupted by these transactions where we have front-loaded our demand for dollars and entered into various transactions, and that is beginning to affect the value of the Naira in the parallel market, at least for now.
Okay, Mr. Rewane, but looking at other climes at this time, when the U.S. Fed, started the battle against inflation there, started raising rates, then we actually saw the U.S. dollar, especially the DXY, that average there, that actually rose, with the rate hikes. But here, we've seen over 700 basis points in the first half, but we're not seeing the Naira actually follow that trend. But if we look at our neighbors like Ghana, South Africa, we're seeing some stability with their currency, even though they also had the same problems. What do you think is stopping the Naira from actually following these trends that it should actually follow? And what should be done to make the Naira actually sensitive to rate hikes?
Well, I think the understanding is that an increase in interest rates increases the propensity to save, reduces the propensity to consume, and actually, and makes that currency, the domestic currency, more attractive relative to others. But you are assuming that that is the only factor. Apart from the exchange rate, there are other variables that kick in to make inflation high. And if inflation is high, then the currency weakens. And there's a time lag between when you announce policies, when the policies kick in, and when the effect is felt. You mentioned Ghana, South Africa, and Kenya. In all of these countries, and especially let's take Ghana for example, inflation got as high as 54%. They increased interest rates quite aggressively, and now inflation is down to about 28% in Ghana. Same thing in South Africa. They increased interest rates aggressively, and they brought down the inflation rate to about 5%. Every currency and every country has its own fundamental drivers that affect its economy. And that is why I mentioned at the beginning that fundamentally, the Naira should be strengthening if you annualize the trade between the Naira and the Nigerian economy and international partners. But there are seasons of the year when things come together. That is what I call this seasonality and the cyclicality, which is taking place especially during the summer months. This should ease up later on. However, there's something else. The fiscal spend in some of these countries, the level of leakages in some of these countries is not as high as in Nigeria. So Nigeria, technically speaking, must begin to address the issue of leakages in the system, governance in both the public and private sector, and the linkages between sectors so that you drive it. You're dealing with growth, you're dealing with revenue, and you're dealing with debt at the same time. All of these factors go to support the currency in the long run But in the short run, we would have some pressure. So expect the Naira to trade at about 15.50, 16.50 for the next 4 to 6 weeks. But after that, it begins to appreciate gradually. Okay. There's some hope at the end of the tunnel.
All right. Well, we'll see if we'll get a soft landing for the Naira at this point in this second hour. But thank you so much. Always great to have your perspective, Mr. Bismarck Rewane, CEO of Financial Derivatives Company. Thank you.
Thank you for having me.